Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Welcome to the show where we interview the nation's leading real estate entrepreneurs. And welcome back if you're joining us again for a second or 100th time. This is your host, Stephen Schmidt, and I'm here today with John Berlet. And today we're going to be talking about John's experience in the real estate world, specifically when it comes to tax deeds and all of the incredible depth that we could get into with that. So John is a professional who has been in the retirement planning and advisory space for over 30 years and has a wealth of knowledge that he's here to share with us today. So we're super excited to have him. And just remember that at Investor Fuel, we help real estate investors, service providers, and real estate entrepreneurs 2 to 5x their businesses to allow them to build the businesses they've always wanted so they can live the dreams that they've always had. So John, with that being said, welcome to the show today.
Hey, thanks for having me, Stephen. Pleased to speak with your audience at Investor Fuel.
Yeah, well, we're super excited to have you here, John. So go ahead and just tell us a little bit more about you and how you got to where you're at today. Because I know when we were talking a little bit before the show that you are in somewhat of a relatively new space, but not new space. So tell us what your background is and how you got to where you're at doing what you're doing today.
Okay. So I'm based out of Austin, Texas for 44 years. Primarily focused on safe money, retirement income planning, tax planning, Roth conversions. I had a registered investment advisory firm and built a book of annuity business up to $52 million. Had a law firm and approached me and offered to buy my book of business in 2021 and offered me a deal I couldn't refuse. So I took that, bought a motorhome, traveled 17 states during COVID. We were able to sleep in our own bed, which was really nice. And I did a deep dive in the new tax incentive, came out of 2017 Tax Cut and Jobs Act called Opportunity Zones. Don't want to get on that subject today, but that's my background. I help people with their 401ks, their retirement and planning their income. I called it people in the retirement red zone, 50 and up, that are more concerned about safety and preservation than they are about accumulation at that stage in life. So most of my clients had other money that was suitable for risk, depending on their risk tolerance. And I had several real estate ventures over the years, partnerships, bought apartment complexes and that sort of thing. But I started buying tax deeds in 1993 in Travis County, Texas. First sale I went to, there was only 2 of us at the auction. And these are in Texas, where we do business. All these tax sales are held by state statute at 10 a.m. the first Tuesday of the month. We have 254 counties, so there's lots of territory to cover. Hard to get more than 1 or 2 counties back in 93 a month. So at the first tax sale I attended, there was a sage old real estate attorney by the name of Walter Winlent.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Who was at the auction, and it was my first one, and there were 13 properties in an area called Lago Vista, which is on the Lake Travis near Austin, if anybody knows Austin. And he looked at me, he said, whenever you bid, I won't bid, and if I bid, you don't bid. I said, okay. So we bought everything at opening bid, and now I know that's not allowed. That's called collusion. But back 30 years ago, and it was a wild, wild west in Texas anyway.
Yeah, no kidding.
So I bought 3 properties. He bought 10. And then I figured out, hey, I'd like to do this in my self-directed IRA. So I'm considered a pioneer in the self-directed IRA space, according to John Heyer. If anybody knows him, he's absolutely a guru, attorney in self-directed IRAs and that sort of thing. But I decided to start buying the next sale with my self-directed IRA, which I opened at a company called Sterling Trust out of Waco, and they were absorbed by somebody no longer around, but there's several custodians that I work with today and have clients work with that are using self-directed monies and buying real estate, as probably most of your audience knows. So that's my background. Fast forward, a little over a year ago, I launched this new offering, which is called Core Tax Deeds. Core stands for cash out real estate. And we're buying property at tax sales. About 2 years ago, I went back and looked at this space after being away because it just got so competitive at the auctions. People were driving up the prices throughout 2000s and were harder to find deals. And then I started looking and paying attention in 2023 and saw where the trend now had gone to online auctions for these tax sales. And they still hadn't caught on. There's only about 25% of the counties in Texas have the sales online. The rest of them are still 10 a.m. at courthouse steps. But it really opens up the whole state where we can bid now all over. We're buying in about 15 counties, and we've had a lot of success in our first year. I'm happy to go into some of those details, but probably be more important to educate the audience a little bit about how tax deeds and tax liens work.
Yeah, you bet.
You want me to go there?
Absolutely.
Okay. So about half the states are considered tax lien states. If someone gets delinquent on their property taxes, the ad valorem property taxes are one of the highest priority liens on the property. Thus, most mortgage lenders require you to escrow the property tax because they know they're inferior. If something goes awry, then they want to be sure that's why they require escrow. So about 50% of the states sell or have auctions, and they bid the amount of interest they're going to bid down or bid up on the lien position, where you take the place of the taxing jurisdiction like the school, the city, the county. And very rarely does that lead to ownership. Something like 5% of lien state bidders actually end up owning the property because those properties end up getting redeemed. I'm a member of the National Tax Lien Association, which is an industry nonprofit organization, and I've attended their conferences, and strongly made up of lien buyers. And I bought 2 liens in my lifetime, both in Colorado, and it just wasn't something that got me very excited. I like owning the dirt. So in Texas, we're one of 5 deed states that have what's called redeemable tax deeds.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
And here they have the auction. Usually the delinquent taxpayers 2 to 3 years delinquent, and a lawsuit is filed. There's 3 or 4 law firms that represent the taxing jurisdictions throughout the state, and proper notice is served. They do a pretty good job trying to find the rightful owners who's delinquent and give plenty of notice. There's a judicial lawsuit takes place. Once the lawsuit is completed, then it will go to auction. And we don't know which properties are going to auction till about 3 weeks before the first Tuesday of the following month. So it's a pretty short window to do your diligence on where you want to underwrite and move forward on bidding on. But the statutes in Texas are like this. If the property is not homestead, not ag exempt, there's a 180-day right of redemption. If it is homesteaded or ag exempt, there's a 2-year right of redemption. So it gives, homeowners sufficient time to come up with the amount of the taxes. But so many of the auctions are driving biddings going up so high, it really makes the homeowner less likely to redeem. If they couldn't pay the $5,000 and it goes for $50,000, it's harder for them. They have to pay the $50,000 plus the penalty. In Texas, it's a flat 25% penalty if they redeem it in the first week or the 5th month. So it's, in effect, it's a 50% first year yield should the property get redeemed. And they have to pay that penalty on anything we've spent to maintain the property. Legal fees, surveys, insurance, accounting. So it adds up. The penalties often in Texas, we have pretty high property taxes, number one, but the penalties tend to be more than the actual back taxes because the way there's such a high penalty kicks in at the 8th month of delinquency. So that's a little bit how Texas operates. We like to bid in the space of non-homestead properties. Of the 14 properties we bought over the last 11 months, only 2 were homes. Both of them were unoccupied. One of them we ended up having to demolish. We thought we could save it, but after we bought it, you can't go in and inspect these properties. You're kind of doing a visual from the street. We do our best job, but turns out we had to demo that property, but we came out fine. It's under contract right now for quite a nice profit. After the demo, we're selling it just 2 lots in the city of Corpus Christi. Everything else we bought, the other 12 properties are non-structures. They're just raw land, lots, acreage, mineral rights.
That's what I was going to ask is why do you prefer the dirt? You mentioned that.
Oh, many reasons. One, the shorter redemption period, 180 days. 2, there's less management cost, with maintaining a structure versus maintaining the raw land. I'm totally convinced you make your profit when you buy it right. It's a lot easier to know what the heck you're buying when it's land, dirt. A lot easier to underwrite, less competition. By the way, we don't bid in the metro markets in Texas. We stay away from Houston, San Antonio, Austin, Dallas. We find our niche in the tertiary markets. So dirt is exciting to me. I think if you buy in the right location, it's just like a structure. Location is 90% of it.
Yeah, 100%. So now, how does this protect you and your investors who are looking for secure places to park cash?
I'm sorry, what was the word protect?
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Yeah, like how does it protect you and your investors? Like how do you line this out? Because this isn't like again, you're not doing this for just your own personal investment, right? Like you're doing this as a part of a much larger a much larger play, right? Or project even maybe.
It's actually a fund. And I'm not clear on that question. How do we protect our investors?
So how do these investments versus something like a traditional, like going and throwing it into an annuity with a company that's been in business for 160 years, or like why do you like this play versus like a more traditional, like putting money in the market, et cetera? What do you like about this? How does it protect you? Like what are just some of those differences and why you chose this as your avenue, I guess? Hopefully that's more clear of a question.
Yeah, and it's clear when you say the stock market, crypto, real estate, risk. I'd like to clarify the fixed index annuities that I sold have no risk.
Right.
They're very safe instruments, but how does it compare to other at-risk investments, oil and gas, etc.? Here, what we buy is we get a deed day one, what's called a sheriff's deed. So we get all right, title, and interest the prior owner held in the property. They were served notice, suit was filed, and they're the owner of record. In many cases, they can't be found, by the way. They're deceased owners, and the heirs don't want to be found or can't be found. And Texas is very unique in many ways, but as far as heirship, there's proper structures. Who's in next step, depending on if it was community property, which most of the Texas property is, but they're protected because our investors get 60% of the profits until they're made whole. So they get issued member units in our Reg CF offering. What we have is a crowdfunding offering that's listed on a platform called Silicon Prairie. I'll give that information if anybody's interested to look it up. It's invest.coretaxdeeds.com. They're a broker-dealer, and all the offering documents, the agreements, subscription agreement, everything can be found on that portal. Has to be filled out, and money goes through the investor portal before it gets released to us, our company. So investors get issued member units, and depending on how much they invest, the minimum is $5,000. We have some bonus incentives at $15,000 and at $50,000. We just closed out our first round of properties April 5th. In fact, we broke into the top 10. I'm real proud to announce this nationally. In the amount of capital we raised the first week of April, between April 1 and April 6. There's a company called King's Crowd that tracks how much equity capital is being raised on these Reg CF offerings nationally. And we came in at number 10. So it's quite exciting for us. We raised $138,000 in 1 week on this Reg CF offering portal. Now I'm happy to go in and discuss those equity splits and that sort of thing if it's appropriate at this time.
Yeah, absolutely. Go for it. Can you tell us exactly what an equity split is for those that might not know?
Yeah. So when we bought 14 properties. 4 of them right now are under contract to sell and will close on or before May 1st. We had 1 property got redeemed. The property that got redeemed in February spun off a little over 10,000 in profits. So let's just use 10,000 as an example. And that everybody that was invested as of December 31st last year participated in our first profits. If you came in January, you didn't get any of this 10,000 distribution. So the 10,000 is split. 40% went to the management team, which I run, and 4 other investor partners who helped me go to auctions, underwrite property. They all put in between 25 and 50,000 to be in the management team. The Reg CF is for passive investors who not active. They want their money to be active. They get 60% of 10,000 on the redeemed property we had. So 6,000 was split up based on however many member units they were issued, which is correlated to how much capital they invested. Once they get their return of their basis, they're made whole, then we go to a 50-50 split on the profits. So we have an incentive to get them made whole, our investors, passive investors, sooner rather than later. Sooner they get whole, the more favorable the management team gets on the profits 50-50.
Right.
Make sense?
Yeah, absolutely.
Okay. So that's how the profits are shared. And the management team takes a total of 6% in fees. We take 2% when we buy the property, 2% when we manage, if it's a year, 2 years, 3 years, however long it stays on our books before we sell it, and then 2% on the sale. So with the exception of the 6% management fees, our legal fees, marketing fees, and accounting fees, then we get to the profits, which go 60-40.
Okay. So now, from my understanding of tax deeds, which is, I would say, more minimal in that side of real estate investing than other sectors, niches potentially, but it really does seem like there's a complexity to it that once you actually get into it, that's really not there. It's just kind of needing to know what you need to know. But once you're in there, like, is there really any downside to investing in these types of deals, or how is it? Is there something that can go wrong in a deal? Has something go wrong for you before? What does that look like compared to, like, obviously you go buy a house, it's got a cracked foundation, you didn't find it in your discover. What does that look like though, specifically with tax deeds and especially with land even?
Yeah, a great question. So that's involved in-depth underwriting experience. I think what I could think of the worst case scenario, it hadn't happened to us, but if you bought a laundromat that had some kind of toxic disposal on site, if you ran into some property, you bought some dirt that was an old gas station or had some kind of toxic waste on it. We did just buy a 6.5 acre parcel in March in South Texas in a real small area called shoot, I can't I'll think of it here in a minute, but it's near Arroyo City. It is Arroyo City, near Rio Hondo, Texas, in the valley. I think within 10 miles of the border down by Boca Chica, where SpaceX is located. So we bought, this used to be a Taiwanese shrimp farm, consisted of 400 plus acres. And it's on Google, you can Google it and see the history. They went bankrupt. They produced some kind of a poisonous shrimp 25 years ago. So they'd raised a lot of money, bought this big place and put in a very high-end, I mean, a lot of money they spent, millions of dollars putting in a shrimp farm, the Taiwanese shrimp farm, and they got sued and went bankrupt. So they started selling these properties in little tracts. They had investors from Taiwan, and all I know is the names on the prior owners, Asian names, so I think they're from Taiwan, but it's called the Taiwanese Shrimp Farm. They may have been from anywhere in Asia, but they were Asian. Each little 5 to 10 acre farm was titled in those people's names. The one we bought, 6.5 acres, for $8,500. According to the city manager's secretary, there's now talk of someone coming in there and putting in an algae farm on this property. And I've been studying now up about algae. I never even heard of such a thing, but there's a lot of uses. Were you aware for algae?
No, I
Yeah.
like that's so interesting. I'm like, what? This
Yeah.
went from we're talking about land to a shrimp farm to algae farm. Like,
Yeah.
this is incredible. This is such an awesome twist I wasn't expecting.
Well, let me tell you another story. That one we just bought in March.
Yeah.
We bought in August last year up in East Texas near the Shreveport, Louisiana state line. 15.6 acres. August tax sale. Paid $20,100, loaded with pine trees, ready for thinning, lumber use, and I had no idea that 80% of the mineral rights had never been severed from the dirt, the surface. It's very rare, but turns out we end up owning the 80% of the mineral rights, and there was 3 horizontal gas wells producing. So we got in payout status for 5 months, had a little over $6,000 worth of royalty checks coming to us. And wouldn't you know, that's the one of the 14 properties that got redeemed in the last minute. Like the 5th month, they had 2 weeks left to the 180 days was over. But they paid us $28,000 and some change. We paid $20,100 plus we got 5 months, and we're probably going to get 1 more month operating, producing mineral well income off that parcel.
Wow.
So that's one we, I hoped it never got redeemed, but it did, and out of our control.
Now, what would that have, if that hadn't got redeemed, what would that have looked like as far as the opportunity with that for you guys?
Well, the dirt alone was valued well over $300,000, 15.6 acres. There was some potential income off the pine trees. That area of Texas is huge, and it hadn't been thinned in over 8 years. But the value of that mineral rights, I don't know how to put a number on that. We didn't get that far. First thing I did was hire a landman who helped us determine that the mineral rights had never been severed. We just bought in the same county last month. Wait, this month? Hold a month. This month we've just bought a commercial corner on a highway, a hard corner, 1 acre piece that's ripe for a convenience store in a place called Victoria, Texas.
Yeah.
But last month or 2 months ago, we bought 6.5 acres, actually 7.5, 6.5 and a 1 acre, another tract that went with it.
Yeah.
And we're still having the landman research whether we got any mineral rights on that property.
Wow.
So all kind of interesting stories we bought. I can remember on a personal purchase, I bought a lot for $1,100 in Austin, Texas. Sold it to the Catholic Church for $38,000. So you do the ROI on 1,100 and 38,000.
Right.
It's off the charts.
No kidding. Yeah. No, I mean, it sounds like a lot of these are smaller deals. Like, do you have any that are like enormous?
Well, no, I just told you our biggest one, the 15 acres.
So that was your biggest.
We bought 2.6 acres, 5 acres, so smaller parcels. We bought, of the 4, I keep saying 5, but one of the contracts fell apart. 4 that are under contract to sell. 2 of them are owner finance. We're taking 20% down, 9% a month with 2-year balloons. So we're going to have a pretty big windfall after 2 years, but those will generate $2,600 a month in income.
Wow.
In the meantime. And then the other 2 are, one's a cash deal, and the other one is that house I told you we bought that we demolished.
Right.
It's under contract to close on or before May 1st.
So let's say somebody wants to get into this space. Where would you tell them to start?
They can go to our website if they want to do it themselves, type person, or they're looking for.
Yeah, like if somebody was wanting to like actually like do this like actively, like let's say they said, "Man, I didn't know this was a thing. I'm gonna go out and I'm gonna do this full time, but I got to make 150, 200 grand a year, within a couple years of doing it." Because it sounds like you have to do a lot of volume to like get larger numbers versus, when you're out like flipping properties. Let's say you go flip 20 properties and off. Even if you're just wholesaling, for example, on wholesale commissions, 20 properties, you might be able to make that, right? But how many of these deals, tax liens, especially because of the waiting period, how long do you think it would really take for somebody to do this like full time as like the only thing they did?
Well, here's the deal on doing it yourself full time. There's a lot of companies out there selling courses and training and weekend
Right.
seminars, and they do a good job educating the people on the upside, but they don't really, what I've gathered, spend a lot of time telling you how much work it is. It's hard work. You
Right.
don't want to make mistakes because you have to pay by 2 p.m. cash on the barrel at the auction. So there's no financing typically involved. It's money on hand, cashier's check by 2 p.m. the sale day.
Right.
So if I were someone wanted to do it myself, had the time and interest, nothing like trial and error. Go to your first auction, observe, get some of the online training that's available. Again, every state is so unique, different. So learn your state statutes.
Right.
There's would be my advice. In Texas, if they're in Texas, you can spend a lot of time underwriting a property that gets paid, pulled from the auction at the last minute. A lot
Right.
of the gems, the really gem stuff gets pulled, and you spend your time going looking and researching and underwriting properties you're really never even going to have a chance to bid on because it
Right.
gets paid. I mean, the morning of the auction often.
Mm.
Certainly Friday before the Tuesday auction, a lot of stuff gets paid. So
Right.
we have a proprietary system that I've implemented that lets us zero in on properties that are unlikely to be redeemed or pulled, excuse me. One, unlikely to be redeemed, but two, unlikely to be paid before the auction. You
Yeah.
follow me? Yeah.
And
So
so
yeah,
if somebody wants to shorten the learning curve and they just want to invest, then because we're coming up on the end of our time. So how can
yeah.
people, if they want to learn more about you, if they want to cut that learning curve out, don't want to have to do it themselves, manage it, find the deals, buy the deals, all of that, where would they go to connect more with you and to learn more about you, John?
Okay. So of course LinkedIn, I've got a presence there, but our website is cortexdeeds.com. And then the offering portal, there's several links on the website that go to the offering portal, but that's where all the offering documents, all the disclosures, all the disclaimers, all the reasons why you wouldn't want to invest, all the risk associated with the offering is at invest.coretaxdeeds.com.
Awesome. And that's where they can go read through all the reasons why they shouldn't invest with you because you legally have to say it.
Correct. I'm a
Okay.
fiduciary, so I place my client's interest before my own, always have,
You
and
bet.
it's served me quite well and served my clients well.
You bet. So let me ask you one last question then. And you can spend as much time as you want on it. But if you had to go back to the beginning of everything you've been doing, I know you said you bought your first one in 93, but like if you had to go back to the beginning, knowing what you know today, what would you do different and what would you do the same?
I would start day one buying with a Roth IRA. If someone
Mm,
doesn't have a Roth IRA, shame on you. The Roth is the best gift Congress has given us. So this sort of thing that has such a high upside, such a high ROI, why not use a Roth? If you make too much money to contribute to a Roth, that's not an excuse. You can convert. You've got any qualified money, you can convert as much as you want to bite off, pay taxes on now. But get a Roth. As you can tell, I'm a huge Roth proponent, and everyone should have one because there's a 5-year clock. If you're not aware, from when you make your very first Roth contribution, you have to have it 5 years for all the profits to come out tax free. And I like to
mm,
ask people this one question. If you were a farmer, probably a lot of farmers there in Kansas near you,
For sure.
Would you rather pay the taxes on the amount of the cost of the seed you plant, or would you rather pay the taxes on the entire value of the harvest? What's the answer?
The CG plant.
Good answer. I'm surprised how many people say the harvest, but with a 401k, 403b, 457, any kind of qualified retirement account, you're going to pay taxes on the entire harvest.
Right.
So pay it on the seed, grow tax free. You can't beat that.
Love that. And then use it to purchase tax deeds.
That's a good option. I actually I think you should have diversification. I personally have a
Sure.
little crypto, not a whole lot, but a small amount. I'm not big on stocks, but real estate is served me very, very well, and I have a significant amount of annuities that generate guaranteed lifetime income. I'll never outlive. I mean, if I do die early, it continues to go to my beneficiaries.
Sure. You bet.
Hey, it's
Well,
been
John,
fun
thank you so
talking about
much.
tax deeds. I love tax deeds. Happy to entertain a phone call. Any prospective investor or anybody just has questions.
Awesome. Well, you heard it here, folks. You can visit and learn more about John at coretaxdeeds.com or on LinkedIn. And everyone, I hope you enjoyed today's show, and we will see you on the next episode. John, thanks for being here today.
I enjoyed it. Thank you.
See you later.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.